What we say is the fastest route to 80 would potentially be if ISIS decides to target Middle East energy infrastructure. I mean, part of the reason why we had that run up in prices in the summer of 2014 was ISIS overran Mosul. When there wasn't an ISIS attack on a major energy facility in Iraq, people said they'll never attack a facility. And what we always say is,
well, they need the money.
They need the money. So what they typically do is they incorporate the energy infrastructure as part of their empire. I mean, ISIS runs an actual state, but they could always change tactics. And we've seen al-Qaeda groups, for example, in Algeria, target major energy facilities. Well, I mean, we think it's mainly the inventory numbers and the technical factors mentioned earlier. But the path to sort of 50, 60, or above 60 on a sustainable basis is signs that U.S. production is rolling or a supply outage somewhere else. I mean, supply got us into this. It's an oversupply situation. Supply will really have to get us out, in our view.
That it's been almost a decade since we raised rates. And in that time, it's been an extraordinary set of circumstances. We've lived through unconventional monetary policy, QE1, QE2, QE3. So don't be surprised to see the Fed move tomorrow, but perhaps only move 12.5 basis points.
I think 12.5 basis points.
That could
just like a token,
happen.
a little symbol saying we're just getting the process started.
We're getting the process started. We recognize we don't want to rock markets, but we need to move. We should have moved already, and we need to. We think that the short-term reaction to not moving might be positive, but over the ensuing weeks and months could be very negative because it's not a vote of confidence in the economy.
I think they'll probably raise 25 tomorrow, but give an indication that before they do more, they're really going to see some more data. So I don't know that we'll get another raise the rest of the year. They kind of know they have to do it. China gives them an excuse to be, their usual dovish selves. I think we'll see something, but some very tame language coming out of it, and I don't think markets are going to move much on it.
The immediate impact, very difficult to say. There will be lots of volatility, but we have to see that a lot of these emerging markets, in particular on the FX side, have priced in already quite a lot. I mean, unlike the Fed fund futures, a lot have happened in the emerging market space already. So we don't think this will be a material setback, the Fed hike. I mean, if you look historically, equity markets globally have actually rallied after the first rate hike of the Fed, and emerging markets have done particularly well in the past cycles.
Look, we probably see a wobble, I think, on Thursday US time when the Fed makes its announcement. I mean, the very front end of the US curve is not pricing a 25-point rate move this week. It's pricing one later this year, but certainly not yet. So I don't think there's any reason to think, even though emerging markets have had quite a severe turbulence the last few months. Well, in fact, since 2013, I don't think they're fully adjusted for the Fed moving this week.